Okay, recording this video on Saturday, the 15th of February 2025, just gone 6:36 p.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. I know it sounds like I've got a little bit of a frog in my throat, but I'm doing fine. Not sure why I'm sounding like this, possibly because I spent the last 3 hours in the water. Beautiful day today here on the island of Kauai in Hawaii. Surf's up, winds offshore. I don't know, I think I had 29 degrees centigrade today. It's just gorgeous. Anyway, we're going to talk about the markets and this week's trading, which was super important. The inflation numbers came out on Wednesday and the market was not expecting the number we got, and everything changed. And it plays out the thesis, the scenario that I had for the beginning of the year. So this is the Emini-Watch YouTube channel. If you have not seen this video, the forecast 2025 year-end rotation, go and watch that one because that's super important. We had some inflation numbers come out on Wednesday, and I'm going to show you this because from time to time I get questions about what economic calendar I use, and this is tradingeconomics.com, and I like this calendar. Most calendars are gradually being moved behind paywalls, and something I'm just not willing to pay for is to find out when the economic results come out. Not particularly interested in what the numbers are, but the timing of the numbers is really important. So you need to anticipate extra volatility when important numbers come out. Nice thing about this particular economic calendar, you can set up for low, medium, high importance numbers. Set it to the time zone. This is my Hawaiian time zone. So for me, 3:30 a.m. on Wednesday. These are the numbers that came out, the inflation and core inflation numbers. And they were higher than expected. So here's the forecast, 3.1 from 3.2, and it actually came out at 3.3 on core. And the inflation rates, the headline number, forecast was 2.9, the previous was 2.9, came out at 3, so it's higher than expected. Now, as a result of that, this is what you'd normally expect from an inflation print that was higher than expected. A note, last weekend I talked about the trueflation numbers came out. So trueflation, which is a more tech intensive way of measuring inflation rates, came out with a weakening number, quite a strong weakening number. And so trueflation was effectively forecasting the CPI numbers to come down, but they didn't. They actually ticked up. So normally with an inflation print that's higher than expected, what you would expect is that that means rates are going to stay higher for longer. So rates are going to be bid up, and bonds therefore will sell off. And then because the rates are being held high, valuations come down, interest rate expense for corporates go up or stay up, and so that weakens equities. And then because the interest rate differential between the US and other markets would mean that there would be strengthening of the US dollar because there's more reason to keep funds invested in corporate bonds or government bonds in the US. And then you might also say that, well, inflation higher than expected is showing that there is economic growth, there's constraints on supplies, and that would put some pressure on crude, oil and commodities and so on, so they would stay high. And initially that was the case, but then all of those things reversed by the end of the day. So bonds went up, equities went up, USD went down, crude went down. And so we're going to show you that on the longer time frame charts. And it's an important inflection point. It could be that people think, well, this is the last of the higher prints and it is going to come down next month, and so they're anticipating that. But let's look at the charts because that's where the real story is being told. As usual, we're going to go from the daily all the way down to the 15-minute and then the 13,500 tip bar chart. Again, we are in an uptrend. The background is in red, which means in terms of price and volume, everything is going up. We are above the blue professional lines, so the professionals were buying this dip back here, and we've been in an uptrend ever since we had that weakness. The bars are red on better sine wave, showing that they are above supports and not breaking supports into downtrends. So we've got an uptrend in terms of price and volume. Yep, on the lower time frame charts we have had weakness and down moves, but the big picture is that we're in an uptrend. We need to see blue professional up bars before this whole thing is over. And at the moment, we're sitting at this triple top, quadruple top, I don't know what you'd call that, but we're just sitting under this 6150 type level, 6200 level. I think we're itching to bust above it. Momentum's 4.7 million, so that's a nice, good, solid read. It's not excessive, but it's strong at the moment. And on the daily chart here, super important, pullback in an uptrend. So we've got two supports in here, and we've broken above resistance on the highest time frame. 135-minute chart, there are exactly three 135-minute bars in a day session of the E-mini. And again, blue professional bars, where were they active last? They were buying the dip, they were buying the dip, they were buying the dip. We're now in an uptrend. It's not confirmed because we still have to bust above this resistance. So in terms of the price activity, the bars are white, which is showing on the 135-minute chart. These have latterly been in a downtrend. So we are above supports on the professional bars, which is good. And we just need to bust above this 45.50 level. That will take us into an uptrend. And we just had a big things happen at triples, where we have supports on all three time frames. Red, red, red. Here we go. So big things happen at triples. We either get big breaks or big bounces. Now, 45-minute chart. Blue professional bars on the dip here. They sold it down at this point here, picked it up back here. We came back with this week's activity. We had a nasty print after the inflation number came out, but we just rocketed from there. Yes, we're sitting underneath the lip here, amateur bars into this move, and we weaken from there, and then we close out on Friday with an amateur bar up here. So that's not great, but the better sine wave bars have turned red, so we're in an uptrend in terms of price. We could get rejected here on this time frame. We just overshot and we get caught under here, and we come back down, find support with another blue professional bar, and then have another go back up, breaking through there. But we'll wait and see. We've got support in the highest time frame, so the energy is behind us to take this thing through. 15-minute chart. Here we go. This was the sell-off 2 weeks ago. Exhaustion sell. Blue professional bars come in. Super high average trade size because the background is in blue as well. So the professionals were buying the dip. We have some volatility last week. We started off on Sunday night very weak. You'll see that on the tip bar chart, but then we recovered. This is the inflation number comes out. We sell off super hard, and we've recovered from there. Amateur bars at the high up here, and we've got resistance on the highest time frame. I don't know. Are we going to just run out of puff at the moment with an exhaustion pattern, come back down a little bit, find support, blue professional bar, and have another go at the highs up here? Not sure about that. Let's wait and see. And the 13,500 tip bar chart here. So previous week we'd had the gap down on the Sunday, and we had a similarly bad start to the trading week. Spike down, we immediately recovered from there and then kept going. So that's the inflation number that comes out, and exhaustion buy getting the move going here. And then at the end of that day, blue professional bars step in at the end of the day, and we rally into 61.40. Now, big pro bars coming at the highs, exhaustion buy, bearish divergence, and we're right on the trailing stop on better pram. So that looks like a bit of a blow-off move into the end of Thursday's activity, and then Friday was do nothing day. I think 19 points of range on Friday. It was super tight. So we're waiting and waiting, and we're sat underneath these 61.45 type levels. So we're going to keep on going through there, or we're going to run out of puff and then trade down for the time being. Better sine wave, we're above resistance on the highest time frame. The intermediate time frame has just put in that little pullback level there, and we've got support on the lowest time frame, same level there. So I think this has got to play itself out, a pullback to end of trend at least on the 13,500 tip bar chart there. And then does that mean we break up through these highs, and then we're looking for the next level where the blue professional bars come in? We have to wait and see. The background at the moment is in red, but if we break through that and then have a test back up and we weaken from there, then we're going to spend a little bit of time kind of heading down. But that CPI print that came out that caused this volatility, they bought that low. They were interested in that low, the test of the Sunday low, and we've rallied from there. So from the higher inflation print, we normally would have expected equities to weaken, and they did for an hour or two, and then they recovered. And so that's not going according to plan. So things are starting to change and to break. So let's see if we get a continuation next week and we bust up through these highs. All right, let us talk about Forex. Talk about Euro chart. Now, these are going to be 460-minute charts for most of these, and there are exactly 3 460-minute bars in a day session of the Euro futures. I look at the Euro futures because we get the tick bar, data for Euro futures. They're pretty substantial. They're not as big as the cash Forex markets, but I think we're about 15% or 20% of the Forex trading now is in the futures market. But here we go. This is the setup that I was talking about at the beginning of the year. On the way down, what we've had on the Euro, we broke support, big things happen at triples here, into a downtrend, nasty downtrend. But it ended up with a left shoulder being made by pullback to end of trend. Now we've had pullback to end of trend on intermediate time frame here, so this is the head of the move, and we've got a sign of strength. We've broken into an uptrend on this time frame here. So this trending move might be done on the way down. And what gives us a little bit more confidence that it's done on the way down is the blue professional bars, and the super high average trade size comes in here. And here we tested at this point here. We had our exhaustion, so it was more getting the move going at this point here. But we had a nasty print down here, and we've recovered from there. And the background is now in red. So we're in an uptrend, confirmed uptrend in terms of price and volume. British pound, all the news out of the UK is pretty dreadful. But in fact, the British pound chart is actually stronger than the Euro chart here. So you can see again, end of last year, beginning of this year, big pro bars come in here. We sell it down, a whole bunch of blue professional bars coming at the lows, super high average trade size, and we bounced from there. And then the Bank of England cut rates quarter point. Last week was that? Anyway, so blue professional bars come in, we test down to the bottom of that range of the blue professional bars, we recover from there, and we got a sign of strength going on here. The background's not broken into red yet because we're still in a downtrend on a better sine wave here. The bars are in white, but we need a resistance line to be printed. We could see that maybe this week, print and then break back above that. It's a little bit junky here. We overshot the pullback to end of trend on the intermediate time frame. We came back to try and make pullback to end of trend. We did not make that. We busted through there. So that's showing the strength of the market there. But British pound, that's strong and that's starting to rally. Aussie dollar, thank God, is rallying. We're up at 63.5. Paying for US goods in Aussie dollar has been hurting me over the last several months. Anyway, enough of my problems. Big pro bars come in here. We had a gap down. Blue professional bars come in. They barely test into that region, and then we've broken into an uptrend. So we're above the trailing stop on better pro-am. The background's in red. We're also uptrend in terms of better sine wave here on Aussie dollar. Here's the pullback to end of trend on the lowest time frame on a left shoulder. Pullback to end of trend on the intermediate time frame. That's marking the head of this move, and we've now busted into an uptrend here. Sign of strength going on there. And lastly, Japanese yen. This is a nice chart on the way down, similar patterns here. Lots of pullback to end of trends going on, but pullback to end of trend on the lowest time frame here on our left shoulder, pullback to end of trend on the intermediate time frame showing the head of this move. We also had pullback to end of trend, so there was a double going on here, and we start to break. All of these bars are red, so we're in an uptrend, sign of strength. And in terms of better pro-am down here, we were ramping off the Rambo pattern, so all the amateurs were getting short at this point here. We have exhaustion sell, big reads, similar to this read getting the move going. We come down here and we've rallied from there. We had some blue professional bars come in, and yes, they were anxious to buy this breakout. We come back and test the low of those blue professional bars, that sequence there, which is what that test is there. We just need to get through those highs to get confirmation that they were actually buying that breakaway move. So getting above that's super important. On Japanese yen, the background's in red. They're showing we're in an uptrend in terms of price and volume. So Euro, British pound, Aussie dollar, Japanese yen, the four biggest traded futures markets are in an uptrend, which means weakness in the US dollar. And then with 10-year notes, again, go back to the rotation video at the end of last year, and I was talking about these Rambo patterns into the end of the year. And often the amateurs get wrong-footed at these important junctures. Now, we've not broken into an uptrend yet, but we've got blue professional bars come in here. We overshot them on the way down here. We've got blue professional bars. Are they anxiously buying up Friday's activity in expectations of rates coming down, and we're breaking into an uptrend here? So it's not broken into an uptrend yet on 10 years, but it's looking strong here. So we got pullback to end of trend on a left shoulder on the lowest time frame, followed by pullback to end of trend on the intermediate time frame. That's the head of the move. We also had another little pullback to end of trend here. So the trending activity on the way down, the low and the intermediate time frame are all done. We're sitting at support on the highest time frame here. All the bars are red. Even in this weakness, it's showing us that that is still in an uptrend because we have not broken these supports here. So we need to get above this level around here. to give us confirmation that we're in an uptrend on 10-year notes, and getting above this level here would break us into confirmed uptrend in terms of price and volume. Not quite there yet, so let's just watch this activity this week, and do we get a little bit of weakness and then we rally through it? Don't know, but that's what I'm looking at on the 10 years. So bonds changing into a rally phase would be super important. And then gold got smoked on Friday here, and I'll show you this chart. So this is a last bar on Friday. We seemingly were holding it together on that weakness. The blue professional bars stepped in, maybe taking profits a little bit here, but we kept on trading up, and then bang, got hit super hard on Friday. And it's been a cracker. I mean, the run that we've had in gold is great. Coming up to the 3,000 level, psychologically super important. It's not played out quite yet in terms of trend activity on better sine wave. We've got pullback support and an uptrend that's got to make an end of trend here. We're above resistance, but we've not put in pullback to end of trends. Let's see, does it just reverse around on that weakness? The professionals step in and just force it back up through 3,000. It's not over in terms of trending activity on better sine wave, but that was interesting. Now we could be rotating. Let me just show you this asset rotation chart here. So this is gold versus all the other major asset classes. Equities, middle of the pack now. Agricultural commodities, but gold's been top of the pack for a year. So is it time people take profit in gold and just roll into something else? Silver not doing quite so well. It also got whacked on Friday, last bar, bang. Remember, silver's under the lip. We had profit taking exhaustion buy, blue professional up bars at 35.5 up here, and every time we come into that area, we've weakened. We come up to 34 and then can't make it through. Yes, we ramped off these Rambo patterns. Amateurs selling it at this point here, and they've got that wrong. But that's weak, and it also turns out to be big things happen at triples. So we've got resistance in terms of all three time frames, the low, the intermediate, and the highest time frame here on silver, and it's testing into that previous level there, and it didn't get through. So silver's weaker than gold because it never made new highs there, so that's important. Watch out for that going forward. And then crude, again, the end of the last year, I said this was my highest conviction trade on crude at the end of the year, and we got that breakout move above 69.70 here, which ended up being a great move into almost 80. But it was being led by the amateurs, and so it was always a little bit suspect, and we didn't have blue professional bars buying the lows. Towards the highs, we had some blue professional bars, and they've come in here, and we've weakened from there. That's interesting that we've broken below those blue professional bars. We've got to spend a little time just working out this trendy activity on the way down. We haven't got support on the highest time frame yet to come in, because these two lines need to come together. These thick lines need to come together. Yes, we'll have pullback to end of trend go off at some point, but we're in a downtrend in crude in terms of price and volume. And this move was always a little bit suspect because it was being led by the amateurs. So we've had some blue professional bars come in here, but it's not at the end of the move. They didn't come in here, they didn't come in here. So that's interesting. We've still got some weakness to go on crude. And lastly, copper. Copper had a great run this year. Again, at the beginning of the year, Rambo patterns, getting wrong-footed right at the end. A bunch of selling going on here that goes nowhere, and we rally from there. And then, again, an odd spot. Blue professional bars come in here, not on this move, but then Friday afternoon on copper, we sold it down pretty hard at 480, which was the last time that we had professionals step in here. In terms of cyclical patterns, yeah, still in an uptrend. We've got to make pullback to end of trend. So copper has still got to play out this trending activity. Friday's was disappointing on copper there. So there we go, run through the charts on these higher time frames, 460 minutes. But I think this week's news, the CPI, and the way the market's traded after CPI is super important. USD likely to weaken going forward, and we're going to have Euro, Pound, Aussie, Japanese Yen potentially strengthening against the USD. So we've got a change happening in these big market plays. It's taken 6 weeks or so from Christmas to now to play itself out, but hopefully these things will start to break into nice trending moves. So there we go. Apologies again for the kind of croaky voice. I hope your trading is going well, and looking forward to next week's trade. Remember, on Monday, is it President's Day? We get a little bit of respite on Monday, but the markets will be back to full force on Tuesday.